Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So the S&P gained about half of 1% this week. Not looking too optimistic here if you're betting on it going up. This looks like it's starting to kind of form out a bear flag here. So we can see that we got the pole right here and then just starting to form out this flag pattern right here. The histogram kind of lines up with that. I think we need a little bit more here on the blue in the histogram for it to be a true bear flag, but yeah, looking kind of bearish to me. We have some resistance right up above it here at the 200-day moving average. We'll see if it can punch through that or not. But my bias for maybe not necessarily next week, I would say early next week, it's probably going up. But over the course, I think we've hit our top here in the S&P 500, the Nasdaq, the Dow Jones. I think from here, we're going to start making lower lows and lower highs on as it jagged sawtooth on the way down. Massive buying though on Friday. That's pretty impressive. And just real quick here on the Nasdaq, same kind of pattern. Looks like kind of a bearish pattern right here. Some massive buying coming in on Friday, but I don't think we're going to see 22,000 in the Nasdaq again, and I certainly don't think we're going to see 45,000 in the Dow Jones Industrial Average. These look to me like, they may have a pop next week, but overall, I think we've seen those highs, and I think we've seen those highs for probably several years. All right, the dollar is up 0.4% for the week. Probably get a short-term bounce right here. We have some immediate resistance right at 105 at the 200-day moving average. But kind of looking to me like we're going to get a little bounce here. We've just had a little reversal here in the RSI. MACD's starting to show positive on the histogram. I think we likely get a little bounce. The 10-year yield has changed about negative 1.6%. This also kind of looks a bit like a possible bear flag right here. I'm not quite as confident on my 5% call, basically lining up with this back right here. I think the one thing that might help that is this is definitely a double bottom right here, but also kind of looks like a bear flag over here. I mean, I can draw it again here, but I'm sure you guys can see this right there and right there. Looking like it's probably going to go down, possibly knifing right through here on this 14 moving average. We'll see. Might have a little pop next week, but I think overall this is kind of looking bearish. And the 2-year yield changed about negative 1.7% to the downside. You guys can see the same pattern here in this one. And the 10-year minus the 2-year yield continuing to just kind of charge a little bit up. So it seems to be following this channel, just hugging on the inside of this channel right here, right along the 50% line. So, we are exiting out of upside down clown world and getting into normal times where long duration debt pays more than short duration debt. And that makes sense because it should. When it's down here, that does not make sense. That's why it's upside down clown world. And 1-month treasury still paying 4.3%, or now it's 4.29, but close enough, we'll round up. Close enough for government work. This is basically what your brokerage firm is paying you when they say that, you're collecting rent. What they're doing is they're putting this into 1-month treasuries. They're keeping a little bit off the top, so you may be only getting 4.2 instead of 4.29. They're taking the 0.09. But this is what they're putting it in right here. And LQD, I have been trying to get a position in this, a long dated call option, and I still haven't been able to get one yet. There isn't a whole lot of volume in this thing. And I'm getting more nervous by the day that this thing doesn't fill. Hoping it fills. It just hasn't yet. I log on every morning and I put in, the spreads on these things are huge, it'll be like, bid 35, ask $1, it's just like way off. And so I'm trying to get one in. We'll see if one finally hits or not. I may just have to pay up for it. We'll see. A little excerpt from Lobo Tigre's weekly newsletter. If you guys don't get this, this is a must read for me every week. I love his newsletter. It's absolutely free. There's a link to it down below. Here he's talking about Powell and their recent press conference where they kept the rates the same. So they recently had a press conference. They paused just like the market thought they would, and they did not increase rates. And he's talking about Powell here. He says, Powell, without calling people stupid, his explanation essentially did say that people are ignorant and they're not understanding economics. So the chair of the Federal Reserve thinks we're all dumb. And Lobo says, it's like this. Economists track rates of change while people care about prices. So he's talking about inflation. He says, let's say John Q. Public goes to the store and sees that eggs are $10 a dozen again this month. And he thinks, wow, that's still a lot. Now the economist standing next to him says, prices haven't changed since last month, so we've beat inflation. Isn't that great? This is why Biden lost public support when he kept trying to use government statistics to tell people that everything was fine. It's also why Powell has a hard time now convincing people that everything's fine. People see already very high prices continuing to rise, even if the rate of change is lower, and even if their salaries are higher, it scares them, and rightly so. He goes on to give his predictions for our favorite commodities, and you can read the report for free in the link down below and in the pinned comment. I love his newsletter. I highly, highly recommend it. All right, and gold had another heck of a week, up 0.7% for the week, so absolutely fantastic. We have another new all-time high in gold at $3,065. It closed the week at $3,021. It's probably going to retrace a little. This to me looks a little bit like, I'm going out on the weekly here. It's slightly bearish candle on the weekly. It looks to me like we're probably going to have a bit of a rollover. I would kind of like it to be a bigger rollover than a smaller one, but you know, this is just selfish Steve talking. I'd like to see it come back down into here, and I'd love to see it come back down into here into the 2,500 range. I don't think it'll get down there, but it might. Certainly not next week. But yeah, I'd like to see this roll over a little bit. We'll see if it does or not. I mean, if we look down here at the RSI, it's definitely starting to angle down a little bit. We'll see if it breaks through that yellow line. Histogram is starting to turn over in the MACD a little bit. But bias for next week is for it to retrace a little and come back down just a little bit. Recorded last week with Michael Oliver and with Doomberg, so be sure to check out those episodes. And, or you could just read the summary in the newsletter. You can sign up for the newsletter by going to the website, stevebartonmoney.com, and signing up. There's also a link down below. No spam, just one email once a week on my thoughts. And next week, I'm going to be interviewing Rick Rule and Patty Nickel. Patty is the CEO of Origin Royalties. He's responsible for an easy double in his stock of everyone watching this show. So be sure to get your questions in for Patty, and I will ask him on the air. All right, gold divided by the S&P 500. So we have a confirmed breakout here. This is absolutely fantastic. Gold is starting to outperform the stock market. Thank you. It's finally happening. We've been watching this one for a long time, and we've finally broken above that 50% mark. We just really need a monthly close above this 50% mark, and that will also be a quarterly close here in, 8 or 9 days. And I feel very confident that that'll happen. And fantastic. This is literally, as this chart goes up, this is showing that people are selling their shares of the S&P 500 and putting it into gold, which is exactly what we need. So this ratio changed to the upside by 0.2%. This may retrace a little bit, but and it may even blip below this, but we have a confirmed breakout here. This is fantastic. Been waiting on that for years. All right, CEF, physical gold and silver, coming down 0.2% for the week. So if you're new to the sector and you want to get some air quotes physical gold and silver here on the stock market, I would make this your first limit order right here, 26.50. It's I think extremely likely to hit. I would say this hits probably 90% of the time. So I'd make that your smallest bet. And then after that, 2360 and 2175. Odds of this green one hitting here, I think, are probably about 15%. So not very likely. So, nibbling, and then bigger bets as you go down. PHYS up 1.2% for the week. Lines I like here a lot. Limit orders at $21 and $20, and same kind of thing. I don't think it's very likely that this $20 one gets hit, but if it does, you'll be glad you got it. And GDX up 2% for the week. So miners could go sideways. Actually, they could go up even a little bit. I've been looking at some value metrics here, and miners are still really underperforming gold. So they may re-rate a little bit, but if gold rolls over, which I expect it will, I think that these miners will probably get hit even more, just as they have in the past. Yeah, so I don't see any buys right here. Maybe a starter position here at $40 if you don't have any, and then a bigger position down here at $36. And GDXJ up 1% for the week. So looks pretty similar to the GDX chart. No buys right now. Maybe a starter position right here at $52.50 and then $47, and then a stink bid down in here at $41.50. I think these are going to correct back down. I mean, like if I go to GDX here, go to the weekly, take a look at that weekly candle right there on the GDX. See how it's got kind of a pretty high wick. Maybe I'm saying candles, but there's a candle right there. And then look at GDXJ. I mean, that's a pretty bearish looking candle there. So, looks like they're probably going down. And Franco Nevada is up 1.6% for the week. So, if you're like us and you picked up a lot of this back when the Cobre Panama debacle happened, and Panama basically bet that they're just not going to need 5% of their GDP anymore. Well, we took the other side of that bet and bet against the Panamanian government, and it has worked out absolutely fantastic, up about 50% since that point. So wouldn't fault anyone for taking any profits right here. I moved the white line up here to 161. Looking really good right here. I mean, you're up 50% if you want to take a little off the table. Personally, I'm not going to do that. I'm going to wait for Cobre Panama to come back online and continue this bet against the Panamanian government. I love betting against governments, and this is just a perfect way to do it. I don't see any buys right now. If anything, this is profit-taking zone, but I know a lot of you guys are in this one with me, and every day that goes by, I think it becomes more and more likely that they're going to restart that mine. Gold Royalty Corporation. So this one had a little drop here to the tune of 9.3% for the week. I think intraday it was down over 15%. So their quarter four report came out, and basically I think their 2025 guidance was adjusted down a little bit. I don't think it's any big deal. We still got a lot of cash flow coming in. I think anything below $1.30 is a pretty smoking deal. So if you got a limit order, set for $1.30, I think it'll probably get hit. And Origin Royalties. This one is, Patty Nickel. So this is the one that we're going to be interviewing Patty next week. So looking forward to that. Looking along this one, the 200-day moving average just seems to be a boss with this stock. I mean, if you pretty much, forget this over here, but if you pretty much just bought anywhere around the 200-day moving average, you've done pretty well. And this still seems to be the case. I mean, it came down here into the 200 moving average, coming down right here into the 200 moving average. I mean, we're above it right now, but basically around $1, I think is fine for this. And Adrian Day in the Rural Classroom was telling us that he was going to have 3 meetings at the PDAC, one with Altius, one with Origin, and then one with the two of them together. So I would have loved to have been Adrian's arm candy for that date, but I wasn't there, so we'll have to ask Patty about that. Anyhow, yeah, anything below a buck I think is a steal here, and make sure you get your questions in for Patty Nickel. And Barrick Gold up 0.5% for the week. This kind of goes in the same camp as GDX. So pretty bearish looking weekly candle there, probably likely to go down next week. That would be my guess on Barrick. Newmont up 2.4% for the week. Looking pretty good. Like limit orders here at $42 and then stink bids down here at $37. If gold rolls over a little bit, this $42 one might get hit, but I think this $37 one is probably not. Low likelihood of that actually getting hit. Agnico Eagle up 0.7% for the week. So the the bull flag played out. I should really probably start betting these things because I seem to be decent at spotting them. And this is probably my own hang up right here. Okay, so here's the flag, right? I just deleted it, but you guys see what it is, and you got this histogram right here, and then you got a bigger histogram right here down in the MACD. The part that keeps me from betting these things is the RSI. When you have to fire on these things, the RSI is usually in the 50s or 60s, and I'm kind of a bottom catcher. You know what I mean? I'm really good at pulling the trigger when you got RSI down here at 29. But when I catch these patterns, look at that RSI 44, 50, and that's a bull flag there. Here's a bull flag here. If I were to run an option on it, I didn't check the pricing or anything, but that's a few percent move there. That would pay off pretty well in options world at 5%, especially if you did a short dated one, which is ironically usually what these bull and bear flags require. Maybe I need to start betting them. I think this is just a mental hang up for me of trying to pull the trigger when the RSI is such middle of the road like that. But, these patterns seem to hit. I'm running it through the computer in between my left ear and my right. And I want to say they hit probably 6.5 or 7 times out of 10, so that's a pretty high success rate. I should really start betting these. Okay, and B2 Gold up 5.4% for the week. It was up even higher than that early in the week. So my plan was to sell. I had 2 options on these, both long dated. One in January 2026, and the other one expires in January 2027. And I was going to wait for it to hit this white line, but the technicals were telling me that it's probably going to reverse, and that's exactly what happened. So I got out on, what day was that? Wednesday. The shorter dated option, I made 46%. And the long dated option, I made 89%. And now it looks like I'm glad I did so. It wasn't an easy decision at the time because I think this thing is probably going to $4 or $5. But I think we got a little pullback. When you look at these bars right here leading up to that when you have stretched moves like this, and then you get a day where it kind of peters out and another day like that, it's usually coming back down. And that's exactly what happened. And so we took our profits, and now we're out. So we can delete that one. And Equinox Gold up 1.5% for the week. So we know that Equinox bought Caliber Mining in an all-stock deal. It looks like Los Filos down in Mexico, 2 out of the 3 communities are on board, and the third one is likely going to come on board. So we're going to make them an offer that they can't refuse, a tremendous offer, and I think they'll take it. As far as any buy or sell points, I don't see any. If you want to trade this thing, I would be selling up here at this top part of the channel and then buying at the bottom part of the channel. I'm going to hold this one kind of like I've done with Agnico Eagle, Newmont, and Barrick. And basically, this is just a little smaller version of those guys. And, once I get to where this is a double, I'll sell half and keep the rest for free. That's my plan with this one. And G Mining Ventures up 7% for the week. So, and Equinox looks like it's probably coming down next week. And G Mining Ventures up 7% for the week. Past the point of concern on this one, I think it's 1.5% of the portfolio, and it's absolutely free. Didn't pay anything for it other than time. And when I finally pushed the exit, I'd say first entry points, if you want a piece of this, would be at $11, and then a little bit of support down here, like a stink bid in for $9.50. Looks good to me. So this is a big shout out to the Rule Symposium for this one. I got to meet these guys in person at the Rule Symposium in Boca Raton. This one bet paid for my trip and then some, so thank you to the Gignac family, and I think it's going to pay off even more in the future considering the pipeline that they've got. They're also going to be at this next symposium coming up, July 7 through 11. The Rule Symposium is a conference consisting of only companies that are in Rick's personal portfolio. So they are already vetted. Now, if you've been to some of these conferences where there are hundreds or even thousands of companies, this is not that. There's maybe 30 companies there, and this is an example of one of them. Okay, I started buying here, and then over here was the conference, and look at what happened since the conference. Rick knows how to pick these things, right? So thank you, Rick. Thank you very much. I would love to see you guys out there. I'd love to meet you face to face, shake your hand, share a cold beverage. And I've already got my plane tickets. I've got my room, the tickets to the symposium, tickets to the boat cruise. It's going to be wonderful. Butterflies, ice cream, and unicorn kisses. And there is a virtual event that you can watch from the comfort of your own home if you cannot make it in person. Links are down below and in the pinned comment below. I hope to see you there. Rio 2 up 1.4% for the week, so construction is underway. We had our limit order in this one hit a couple weeks ago, and all we were doing here is we were just catching the cup and handle pattern. And we got the cup right here, handle, and got it at the bottom part of the handle. We'll see if this works out or we have egg on our face, but I think this project is going to be amazing. I think it'll do very, very well. I am literally betting on it. Silver down 2.8% for the week. Looks like we're probably going lower. $35 is some pretty pesky resistance. It's pesky, I tell you. That's where this white line is right here. It's at that pesky $35 level. It's kind of like your bratty little sister. Like, you love her, but she's a brat. Right? That's what this $35 level is right here. We love $35 silver, but it's still pesky. It's a brat. So if you're confused by that analogy, then don't fret. So am I. Gold to silver ratio. Gold outperformed silver by 3.5% this week. So the ratio is now 90.2 ounces of silver to get 1 ounce of gold. I see this going up slightly next week, probably right up to that white line, and then getting rejected just like it has so many times before. Let's see if I'm psychic. PSLV down 2.1% for the week. So this is just going to follow silver. This is your physical bet on silver in the stock market. Easy mouse click way to do it. I like this level right here, $10.25, and then after that a stink bid in for $9.50. And SIL, the Silver Miners ETF, down 0.3% for the week. Down 0.3% for the week. So double top, we had a double top here hit. That happened on Tuesday, got rejected, and then came right back down. So this is going to be a leveraged bet on silver. Watch this yellow 200-day moving average. We do have a bit of a golden cross right there. It's not a fantastic one because see how it just dipped and came right back, but it is one nonetheless. But levels that I'd be watching right here is see this upward channel trend line right here. I like that one as maybe an initial purchase. The 200-day is an initial purchase, and then stink bids down in here at 32 and 30. And SILJ up 0.9% for the week. I think we just need to be patient here. 1075 is the level, 975, and then $9. Like those levels a lot for this one. Could get caught here by the 200 moving average at around $12, just a little bit south of where it is now. But if silver gets corrected and comes back down, this is going to correct even more. And Pan American Silver down 0.1% for the week. So it got within 50 cents of my limit order sell up here at $28. So that would be, what percentage move is that? That's probably a double, right? Yeah, a little bit more than a double. I was watching it this day, and I thought about, moving past the point of concern on this one, and I just didn't. Now that I can see the future, I regret that decision now, but I'm holding fast to 28. We'll see if that's wise or not. This may correct way back down, and gonna miss my opportunity, but time will tell. We shall see. And Learn is asking a question. He says, "Hey Steve, I have some free time. Can you recommend 2 books for learning a bit? Many thanks." Yes, one I'm reading myself right now. It's called here it is. I brought it up for you. The Triumph of Politics by David Stockman. I'd like to interview him before and during the Rule Symposium. Basically him talking about, he was during the Reagan Revolution, and he wanted to basically balance the budget and get the country out of debt. And within about 3 months, politics triumphed, derailed him. And I think that's kind of the same thing that we're going through now. I would love for the Doge committee to actually come in and be able to cut $2 trillion and, get all the fraudulent fraudsters out of Social Security and that are just, bleeding us dry, making us pay more taxes. But I don't think it's actually going to happen. And he documents why it didn't work in the 80s. And he even wrote a new book that I'm going to read after this about why he doesn't think it's going to happen now. If anyone knows where you can bet on that, bet on the success or failure of the Doge committee. I was looking around a few betting sites right before I pressed record, but if you guys know of anywhere where that could be, I would be very interested in betting against the Doge committee and hoping to God that I'm wrong and they actually pull it off. I would love to lose that bet, but I think it's pretty much money in the bank. All right, and copper, paging Dr. Copper, is up 4.4% for the week. So I think we got a little bit more room here for copper. This is looking fantastic. I haven't sold a single copper stock yet. I've just been buying on pullbacks. I'm bullish on copper this week. Gold divided by copper is underperformed by 3.6%. So copper outperformed gold by 3.6%. It now takes 590 pounds of copper to buy 1 ounce of gold. And COP.U, thank you, Blaine. Loving this one a lot. This is your physical bet on copper in the stock market. This doesn't come without a management fee, but right now, today, it's trading at an 18% discount. Caveat here, if we have a pullback in physical copper, that discount's going to get arbitraged away pretty quick. But, as far as your first limit order right here, I like $7 kind of a lot. There seems to be, with copper, there seemed to be like this affinity towards even numbers on these things. So I could see it having a run up to $6 pretty quick. Not this one, but the spot price of copper. And the same thing here with this copper fund. I mean, $7 seems to be the note. And then, one guy got lucky down here and got it in for $6. Wasn't me on this copper fund. So like this one a lot. And I think this arbitrage will eventually close. Let's see, COPX, where are we? There we go. Up 1% for the week. So I've been selling puts on COPX, and I'm just going to continue to do that. So I'll let you know if they actually hit. This blue one here wasn't a put that sold that hit, but I just bought straight up shares. But I'll be selling puts on this for as long as I can. Would love to buy more COPX. One mistake I made last time in copper here was I've been in this fund for coming up on 2 years. And, we had a nice little run here up to $5. I made over 50% and I never took any profits. And I don't think I'm going to repeat that same mistake again. We got some pretty decent resistance up at 47.25 right here, but I've been treating copper as Adrian Day and Joe Mazumdar taught me in the Rural Classroom. Simply buy it on pullbacks, and that's where this software is amazing for that. TradingView, There's a link down below if you guys want to try this software for free. It doesn't cost you anything. And just buy this thing on pullbacks, and that's exactly what we're doing. If we get a recession, this thing is going to get whacked. And I'm expecting to increase my exposure to copper quite a bit. All right, COPJ up 5.2% for the week. Didn't get anything in this. I don't see any buys right now. Coming up on some resistance on this 200 daily moving average. Got our limit orders in down right here, right on these lines, 1775, 1735, and 1655. And Freeport is up 3.6% for the week. It had a pop here and a bit of a run, but it's still in a general downtrend. So until that is broken, breaks through the 200 moving average, we're still in a downtrend here. I like limit orders at 36 bucks and 33. And Maduro Capital up 19% for the week. So not sure what happened here. I didn't see any news releases. Maybe this is just like one guy establishing a bigger position, but had a massive move here on Maduro Capital. If anyone knows what happened, please put it in the notes below, in the comments below. Would love to hear it. And uranium is up 1.6% for the week. We might have found a bottom here in uranium. I know I've said that about 7 times here after $80, but maybe we have, maybe we haven't. I don't know. We'll see. I was talking with Rick about this one last week, and he is getting interested, and he's buying again in uranium. So we've had a really nice sell-off in this. Things are actually getting cheap here, and I think we need to be purchasing a little bit more uranium. So pretty cool, and we have been. Gold divided by uranium, it takes 46 pounds, almost 47 pounds of uranium to buy 1 ounce of gold. And SRUUF, the Sprott Physical Uranium Trust, has, gone up 7.9% for the week. So finally closed that discount window. I could have got some in down here for like in the 13s. I didn't pull the trigger. I was waiting on the 12s, and I think I just got a little too greedy. Didn't happen, but had a nice little recovery here in SPUT. Still 66.2 million pounds. The discount now is 6.5. So, no buys now. But if they don't move to a premium soon, then they're going to have to do something. So that goes in line with let's see. Oh, here it is. Bella's question. Great show. Thank you. Are you hearing the buzz about Sprott Physical Uranium selling pounds to cover administration and storage costs? I'm holding off on buying more shares of it now. I didn't like that idea. Thank you, Steve. Yes, actually, I have heard of that. And let me share my screen here, and I'll show you a neat little tool. I'm not sure who came up with this, but thank you to the person that did. This is the SPUT tracker. If you guys care, let me know in the comments, and I'll put a little link to this so that you guys can follow this Google Doc. But this basically tracks when the Sprott Physical Uranium Trust buys pounds. So we can see here in November 7th, they bought 50,000 pounds, and then November 19th, they bought 58,500, and you go up here, and on 9/26/2024, they bought 100,000 pounds, right? And this is their running total, their net asset value, the cash position, how many pounds of U3O8, cumulative growth, all that stuff. Really cool. So to answer your question, I'm not worried about it. If they have to sell 100,000 pounds to raise some cash so that they can, pay for some storage costs and management fees, I'm fine with that. I don't care. We have 66 million pounds. If they have to sell 100,000 pounds, I really don't care. So that's just my opinion. We're getting John Chimpaglia on the show next month, and so we can ask him straight up there and get it from the horse's mouth and see what he says. But yeah, I'm not worried about that at all. So there you go. And Iga Biva says, thanks for finally bringing up tin. You're welcome. Says also the 78.6 fib retracement is known to be the final chance of a bull flag, with spot uranium about 5% away from it. So I pulled this up so I wouldn't forget here. Let me pull in the 78.6% retracement. So that'll be this bottom line. Okay. Yeah, I guess it's hitting about there. I didn't know that about a bull flag, that the 78.6 is the last chance for it. If that's true, then I suppose this could be a giant bull flag here. Let me get this out of the way so that you guys can see it. And we'll go this. And it's just this giant pull, and then, just follow the blue lines here for the flag. Maybe that's a giant bull flag. I don't know. For me, this bet is a lot less technical and a lot more fundamental bet. Like when it was at a discount here and I was buying, and then when it just way overshot and the term price was still in the 80s, but the spot price was like 108, that was the time to sell. And then back here, we started getting a discount, sell, right? So even these bets right here that were a little bit cheaper, and these were way cheaper, then it goes to a premium, and Sprott has to purchase more pounds, then we sell because it goes to a premium, right? And then we're doing the same thing right here. And once this thing goes to a premium, which it inevitably will, then we'll hit the sell button again. All right, and Cameco is up 4.8% for the week. So I like buys here on this yellow and this green line, $41.25 and $36. I like 36 a lot. That comes in for a nice little double bottom right there. Yeah, I think that would be pretty snappy. And URNM up 6.3% for the week. Finally catching a bid. So your $34 limit order hit right in here. So that's fantastic. Stink bids in here for $30. I don't know that it'll get down there, but have your limit order set just in case. I'd like to rinse and repeat this one on the uranium trade. So the last time, this one ran up over 103%. Didn't catch the exact top up there, but pretty close to it. Want to run this again. We can start trimming here once we hit this $53 mark, and then take even more profits up here at 60. URNJ up 9.6% for the week. So our green stink bid finally hit at $14. Congratulations, you got it. I think now is fine too, but I'd like to, if this comes back down for like a double bottom right here into the 14s, I'll probably be buying more. The mistake I made with this one was not taking profits up here after going up 125%. That was just dumb. I should have sold this as well when I was selling everything else uranium. I don't know why I didn't sell the most leveraged one to it. But anyways, I've been buying on the way down, and I'm going to do it again when this thing runs up, assuming it does. And Uranium Royalty Corporation is up 7.2% for the week. So limit order hit down here for $1.90. It got even lower than that. I was literally looking at this when it was $1.58. And it got down to $1.56.5, and I put in a limit order for $1.50, and I was just a few cents away, and it just never hit. So I think sometimes I get a little too cheap on these things. I mean, at that point, RSI was 24. Like, was I just hoping it was going to go to 17? I don't know. Anyways, like when you do the math on this, these guys have, and I think they're picking up another 250,000 pounds here pretty soon. They have over 2 million pounds of uranium on the books. So it got down to the point to where, like, when you subtract what the book value was of the uranium, all the royalties that this company has were only worth like, I think it was like 20 or 25 million, and they're worth way more than that. Should have just pressed the buy button, but whatever, I didn't. And UEC, Uranium Energy Corporation, is up 8.9% for the week. So had a limit order hit right here at $5.40. And then I set two more down here, one for $4.50 and one for $4.12, just lining up with some back support right back there. Never quite got to them. Got within, I think, 10 or 11 cents of it. Got within 11 cents of it and never hit. Maybe we'll get a repeat. Maybe we'll get a liquidity crisis, and these things and these levels here will look like child's play, and we'll actually get down maybe into the twos or something. I could see that happening, No one cares about the uranium stocks when they lose their job. And oil WTI is up 1.6% for the week, still just holding above that $67 mark. But what do we see here, boys and girls? What does it look like is ironing out here in WTI? You can probably already see it. I'll start drawing it and maybe you'll see what it is. It could be a long pole right here, but I think it's more likely that we just got a shorter pole here. What is that? That is a bear flag. Not looking too good, right? I don't know that technically the longer and more times we hit on this little level here, the more it makes me think that we're probably going lower. I hope I'm wrong because I got a lot of oil stocks, but I don't think I am. I think they're probably going to get cheaper. So we'll see. And Brent is up 0.5% for the week. So these are still in a downtrend, but they're putting in the same kind of pattern. It looks like a little bear flag right there. Remember those hit. There it is, Brent. Remember those hit about 6.5, maybe 7 times out of 10, right? 65, 70% of the time, these things are pretty accurate. So hoping for the 30%, but probably not going to happen. Gold divided by oil changed about 1% this week. It now takes 44.25 barrels of oil to buy 1 ounce of gold. And XLE, our favorite oil ETF, is up 3.1% for the week. No buys now. As a matter of fact, if you're a trader, you ran some kind of option on this. I like this as a profit-taking zone. Limit orders down here at $83.79.75. And Exxon Mobil up 3.2% for the week. So massive buying on Friday, just like in the S&P and the Nasdaq and the Dow. Massive buying on Friday. I'm not really sure what happened there, but we had quite a bit of buying. Yeah, there we go. Quite a bit of buying. Double. Let's see. What is that? 40 million shares. 41 million shares. 16. So more than double the average daily volume. So huge amount of buying. Same for Chevron as well. Up 4.9% for the week. And just some massive buying in there. I'd say average buying is anywhere from 5 to 10 million shares, and we had 21 million shares on Friday. So massive buying here. One thing that's kind of interesting, I think I brought this up last time, but we can run a Fibonacci extension here on the last little run up, and we go here to here and down. And we hit around 169, which is where I've got the white line drawn. So I could see a little more upside in these just right up to that 169 level. And CNQ, Canadian Natural Resources, up 3.1% for the week. Nice little run, but it's still in a downtrend. So we needed to break above this 200-day moving average, kind of break this downward channel trend line right here. Still like limit orders for 26.50, which you got. And if you want another one, wait for that double bottom and hit it. Blackstone Minerals up 1.6% for the week. Still always watching for options on this one. We've run a couple successful options. That's what these yellow arrows are on this one. Although I didn't really catch this one here. That's should be apparent because there's no arrow there. The RSI didn't get down low enough. Like this one, I should have caught. This one was, I think, inexcusable. Should have caught that one, but didn't. Might be ready to run a put, though. If it gets up here to like this 1550 level, then I could be looking to run a put, and that might time perfectly with crude oil breaking down. And Freehold Royalties, a great dividend one, up 1.8% for the week, like limit orders at $12.50, and maybe even stink bids around $12. And do you care about dividends? Well, according to Adrian Day, you should. He is doing a presentation in the Rural Classroom Plus about dividends. So investors looking for regular income should be interested in dividends. A company that is able to pay a good dividend regularly must be doing something right. When we consider dividends, we want to look beyond just the yield. You got to ask yourself, is it sustainable? Dividends can vary considerably from year to year without it necessarily reflecting on the health of the company. In his class, we will look at why this is and what it means for investors. We'll also look at special dividends as well as stock dividends and DRIP programs. So a lot of you might be in the DRIP program, and it's the dividend reinvestment program. It's basically a button you click in your brokerage account and they do it for you. They just automatically buy new shares every time you get a dividend, right? They use the dividend money to do that. So yields of 10% and even more are available from solid companies. We will look at these companies and the special factors that investors should consider. We'll also discuss the kinds of companies that really should not be paying dividends. We'll also look at good times to buy dividend payers. We'll look at good places to search for high dividend payers and suggest several diverse companies that fit into a good income portfolio. So his presentation is going to be in the Rule Classroom Plus. It's this Wednesday, March 26th, 7 p.m. Eastern Time in the Rule Classroom Plus. You can try out the classroom free. The classroom is absolutely free. We're over 11,000 members. And then for more serious investors, there's a group of about 300 of us that are in the Rule Classroom Plus. Now, you can try that one out free for 2 months. If you don't like it, cancel. You don't owe a dime. After the 2 months, if you enjoy it, which you will, it is $39 per month. So try it out. You got his class there for free. You can join and see if you like it. And if you don't, then, no obligation whatsoever. I hope to see you there. Alrighty, natural gas is down 3% for the week. So I think we're going to get a little bump here next week. Let me go to the weekly and check out. Yeah, so we are just above the 200 weekly moving average, and we are right on the 50 daily moving average. So I think a bump is likely coming in natural gas, and we are definitely in an uptrend here in natural gas. I'm looking for my little arrow here. There we go. And we're going to make this arrow green because we are in an uptrend. Red is an arrow that's in a downtrend. But yeah, I think natural gas, that arbitrage is closing, although we still have an amazing arbitrage going on right now in Asia and Europe that I think will be closed by Canadian and American natural gas producers, like this one right here. Devon Energy up 4.6% for the week. So I like limit orders a lot, right around $32, $33. See that little gap right there that got filled? Somewhere around there, that would come in for a nice little support zone stink bid at $30.40. Woodside Energy just continues to disappoint, although they just paid a dividend, a pretty good one. Their dividends are looking good, but the stock price is just not. So I'm not really sure on this one. As far as any support, I suppose around where we are now. I mean, I got this green line drawn in here at 1378, but no telling if that'll hold or not. If passes prologue, it probably will not. Birchcliff Energy is up 9.8% for the week, so I don't see any buys right now. It looks like it's hitting right on that 400-day moving average, fairly high RSI, but had a nice run up in the last couple of weeks. I mean, went all the way down from 28 RSI all the way up to 67 in short order. So I'm not sure. Going here to Pado as well, had a similar performance. Pado up 6% for the week. So I don't know what drove these up recently. Maybe I mean, it looks like Carney's going to win, but I can't imagine that being good for these companies. I would think he would be terrible for them, but the share price went up. So if anyone knows what happened, please let us know in the comments below. And on these ones especially, pretty small market cap, so limit orders only, not a whole heck of a lot of volume, especially not over the counter like this. But I want to illustrate a point here with these limit orders. So we got one right here, just the line set at $10.65 and another one at $9.75. But anywhere in between these, I think is fantastic. I mean, look at this one right here, February 3rd. Low was $10. So someone got lucky and it got to 10 as there was enough people selling, and they got it for exactly $10. You know what I mean? Like you can get, they have these sharp wicks that, if we go down to the 30-minute or the 5-minute, I did this earlier. I don't want to have to pull these up now, but you can see that it was one guy that got it, and Yeah, don't be afraid to get kind of stupid cheap on these ones. I mean, like, look at this one over here. Someone got lucky at $7.88. You know, if someone's selling and they don't care what the price is and they make the mistake of doing a market order on one of these that has so little volume, you could get lucky, you know, and that's why we got the limit orders sit way down here. All righty, coal. Thermal coal is down 2% for the week. Is that right? Yeah, down 2% for the week. Hopefully we're ironing out a floor rate here at $100. I just keep moving the line down every time it gets cheaper. Met coal is down 1.4% for the week, coming in for a little double bottom right here on 174. Hopefully that's the floor. And the coal ETF is down 2.1% for the week. We asked Doomberg about this one. He seems to think that coal has some more weakness in it. So this is one of the worst performers in the portfolio. Hopefully it's approaching extremely hated here soon, and we might actually get an uptick. So we are at 12.4 million assets under management, 700,000 shares, about the same as it was last week. Glencore is down 7.6% for the week. So this arrow right here was me selling some gold and buying Glencore, and we can all see how that decision worked out. It's looking to be a pretty poor decision so far because gold has gone up since I bought that, and Glencore has gone down. Although I've got my finger inching towards the buy button again because we're getting pretty close here. AMR is down 4.8% for the week, and why wouldn't it be? Getting really, really cheap down here. This is the worst performer in the whole portfolio. Got a lot of price action down here around 118 though, so hopefully that holds. That's lining back up with some back support back here in 2022. We'll see if that holds. And BTU is finally up 4.9% for the week. I don't own any of this. I've just been running options on this and quick little trades. Have we found a bottom in BTU yet? I don't know. I mean, this might be a bit of a bear flag right here, which suggests that it's going lower. A lot of buying on Friday. I don't know. I'm not sure. I'm going to wait for a discernible pattern before I place any kind of bet. So far, I'm 6 out of 7 on this one as far as being profitable on bets. The last one that I ran a call on, I think I got it right there, and it just completely did the opposite and ran away. Okay, and platinum is down 3.4% for the week. Really like buys, maybe a starter position around $950, and then a big position at $900. Easiest way to play that on the stock market is PPLT. And this is your physical platinum, just basically a warehouse full of platinum bars. Same kind of thing. Starter position at $85, and then limit orders down here at $82.50 and $80. And Crankbet says PLTM instead of PPLT. So I'm going to share my screen here, and we can compare and contrast. And I've looked into this one before, Crankbait. You must have, I know you've been with us a while. Maybe you just missed that episode. But anyways, this is the reason I went with PPLT. Okay, so we do have a higher expense ratio. Okay, it's 0.6 as opposed to 0.5. So I'm paying an extra $10 for every 10,000 every year that I have this one instead of this one. But this is the reason why I do it. Look at the assets under management. It's over $1 billion. Under PLTM, it's only 50 million. Okay, so we have 1/20th of the amount of assets under management, even less than that because it's 0.06. Anyhow, we have a lot more. This is so much more liquid, and when platinum does its final run, I can click a market one on this one. I can't on this one. Does that make sense? Like I can get out fast, which I think is what I'm going to have to do when this thing actually runs. And I don't want an illiquid fund in this one And PPLT is liquid. Maybe it's not quite liquid enough to do a market order, but it's way more liquid than PLTM. There's just almost no assets under management. Maybe that sounds a little hypocritical when I've got the coal ETF, which only has 12 million assets under management, and this one and the one you're talking about is 4 times that. But this is the only coal ETF that there is, right? There's a couple platinum ones, and this one's the most liquid, so that's the one I went with. Okay, costs a little bit more, but I think that's going to pale in comparison. When this thing goes, it's going to go, and it's going to be wildly successful, I believe. And I want the most liquid vehicle when that happens. All right, and Palladium is down 1.1% for the week. So still like $900 for Palladium. I guess $950 is a starter position if you want, but I think I would just wait for $900. It'll probably get there. And PALL down 0.7% for the week. So starter position at 85, then 83 and 80 I like as limit orders. And SPPP, both platinum and palladium, easy way to play it, down 1%. I think first limit order at $9, then 875, and then 825. And this is the whole reason we're making this bet in the first place. This is platinum divided by silver, and we can see that right now it takes less than a kilo of silver. 29 ounces of silver will get you 1 ounce of platinum. This blue arrow is where I made the switch, right? But we have moments in history where it gets all the way up to 150, and same thing with gold. Right now, you can trade 3 ounces of platinum for 1 ounce of gold, or vice versa, 1 ounce of gold for 3 ounces of platinum, and I think that is a steal. And if you are a gambler, I think you should do so. Okay? There's moments in history where it gets to 2 to 1, even higher than that, 2.4 to 1, right? So it goes the other way. You could trade 1 ounce of platinum for 2 ounces of gold. I'm in. All righty. Nickel is down 2.4%. I'm sorry, 2.2% for the week. It is finally catching a little bit of a bid here, so hopefully put in a floor down there at 15,000 a ton. NIKL down 2.4% for the week, so nickel miners getting smoked even more. I think now is a good time to establish a position. Anything you buy will be cheaper than what I've got so far. I should probably do one more. That's what I thought this was one more. Not quite. Centaurus Metals up 6.7% for the week. So I think this parallel channel right here has been fairly accurate now for about a year or so. I think anywhere towards the bottom of this parallel channel, these guys are going to be out at the Rule Symposium. Oh, and that reminds me, Albert and I in the Rule Classroom Plus are going to start pulling up charts on all the companies that are going to be at the Rule Symposium. So it's going to be kind of cool because we'll get to see what companies will be out there that are in Rick's portfolio, and we'll get to see them on the stock charts before the symposium and try to find neat little places to buy. So this will be one of them, is Centaurus Metals, the project down in Brazil. And tin is down 2.5% from last week. The only reason I brought this one up was because of Alphamin. And Alphamin is down 18% this week, so just absolutely got smashed on the news out of the DRC, the Democratic Republic of Congo. And so anyways, Rick said that he was adding to a position that he's had forever. And basically, as I see it on the charts, if you want a piece of this, now this civil, this military unrest could take a couple months to resolve. It could take, maybe a couple of years to resolve. I have no idea. But eventually, the tin there is going to matter, and people are going to start mining it again. So, as far as technically on the charts, I like a buy around 30 cents, and the distinct bids down in here at 18 and 10. Although I think some other action would have to take place for it to get way down there into the 18 and the 10 cent range. And The Bloomberg is up 0.4% for the week. So Bloomberg Commodities Index is up 0.4%. Talked to Michael Oliver last week. He likes that one a lot. Iron ore down 0.8% for the week. Still trading kind of in the middle range here in between 92 and 112. Just exactly, yeah, exactly right in the middle of that range. And Robert asked, did NUE just form a cup and handle? So we got Nucor Corporation. They're a steel company here. Cup and handle. So zooming out, I think what you're talking about, I don't see any cup and handles here. I think what you're talking about is this right here. Would this be the cup that you're talking about, Robert? Let me draw it so everyone can see. So we got the top end of the cup right here, and then the handle. And the answer would be no. And the reason the answer is no is because cup and handle is a continuation pattern. So what we need is the stock price to be going up like this, enter into the cup and the handle, and here the stock price is going down. So we can negate that right now on the cup and handle pattern is we need the stock price to be moving up like that instead of down. Another way you can tell is how far down does this retrace right here? And it should retrace only about 38%. Can go as much as 50, but you don't want it to go beyond that. So we simply take the bottom of the cup here and ride it up to the top. And, you know, to your credit, when you ask this question, let me get rid of the volume here so that we can see it a little better. When you ask this question, this bar wasn't here, you know, this retraced through the 38. Oh, let me adjust this and get rid of that. There we go. Went through the 38, went through the 50 for a couple of days and even closed below it. And yeah, so not a cup and handle pattern. First of all, because it's the stock price is going down, we need it to be going up. And second of all, it retraced too much. But, you know, the second part you don't even need to move on to because the stock price isn't going up. But good question, sir. Okay, and BHP into the buy zone here. So like limit orders for $48.50. I think that'll probably hit the next day or two. Oh, let me get the volume back up there. There we go. Like any orders around there, we just paid a dividend, so it's probably not going to hang around here too much longer. And Rio Tinto is, let's see, BHP was down 0.6%. Rio Tinto is down 1.7%. Still like limit orders at $58.50. And our favorite metals and mining ETF pick, it's got BHP, Rio Tinto, Freeport, and Glencore in it, are the top holdings. Like this one a lot. This one is down 1.1% for the week. Like limit orders at $35.33 is even better. And this is one I was on Daryl's show, the Money Level show. We recorded on Friday. He told me it'd be out this next week. And he brought this one up to my attention. I've been meaning to look up China ETFs for a bit, and I just haven't done it yet. And anyways, he brought this one up. And I know John Polomey has been big on China and just saying that it's super undervalued. And one thing that I like about this is, I don't like a buy right now on the charts. Let's get that out of the way. But they're supposedly going to be start doing some passive income or passive investing. China is, which I think could be kind of cool because, you know, it may not be good for the Chinese citizens, but as far as like the China ETF, I think that's going to absolutely kill it if they do that. You know, those people were investing in a lot of real estate, and so much so it was in an absolute bubble. You can go on YouTube and watch big giant apartment complex condo buildings that are completely empty, whole cities of them, that people own these things and they were just blindly investing in real estate and they didn't even have a renter. Like it's insane that they would even think to do that. But you know, that's how bubbles happen, tulip mania, whatever. And that when it was real estate, you know, if they start doing passive investing in China, then, you know, I mean, that's a heck of a run for our stock market since we started doing that. I think China could be next. So I'm going to be watching this. I'm going to be looking for pullbacks on this, and I'm probably going to be entering into the China market. Once bitten, twice shy. I was in China Mobile a couple of years ago, and they got a contract with the Chinese military, and then all of a sudden, this was during Trump's first presidency, and my shares were frozen for like years, and I just watched the stock double, nothing I could do about it, watched it go way down, and then it finally sold, and I think I made or lost a few $100 or something. It was basically even to where I bought it, and but just watched it that whole time. So hopefully that doesn't happen again with China. I don't think it would happen with the Chinese ETF, although it happened to me with the Russian ETF, so go figure. All right, Bitcoin is up 1.5% as of this moment. So we finally got down into that level, hit the spot, and then bounced right up. It's underneath the 200-day moving average, and we got a question from Guy Roy. He says, Bitcoin is in a head and shoulders pattern. I thought it was going to 48K, but the pros say 28,000, which is most likely. Okay, you're going to have to draw the head and shoulder here for me because I don't see it. I mean, is there a massive like head and shoulders? I don't know, man. Send me a screenshot or a tweet or something of this head and shoulder pattern. I don't see one here at all. Excuse me. The pattern I do see is I see a massive cup and handle pattern here that spans years, right? And this is a valid cup and handle, okay? And if we do the measured upside target on this thing, it gets absolutely stupid. And let me just do it for you here. So we take this, bottom of the cup, top right side of the cup, 57,000. Excuse me. So we take 57,000 from the top of the cup, right there. Close enough. 128, 130,000, I think, is somewhere closer to the range. So if this cup and handle plays out, I would expect it to go like, 125, 130K. We're going to have some resistance in between now and then with this yellow line right here around 92,000, and then again around the all-time highs. But that's how you measure a cup and handle pattern. And then if we do the log chart, I mean, this is where it just gets absolutely stupid. Okay, 350%. And then we take 350%. I'm going to have to pull this way down. And we take 350% from the breakout in the handle. And yeah, see, I didn't even make it go that high. There we go. All right, 350%. And what line was that? Well, that was north of 300,000. So anyhow, possible, likely, I'm not sure. But, I mean, he did open the Bitcoin, the crypto thing, like, who knows, I mean, like he's trying to push this and Doomberg went over his, kind of scary, but, it made a lot of sense, Doomberg's argument. So if you haven't watched that video, be sure to check it out. So as far as like, where's the support levels? You said 48,000 and 28,000. I can definitely see where other technicians are seeing the 48,000 level. And all they're doing is they're just lining up. I'll put it right here for you. Alternate H and right around there. See, we got this last one hit right down there, right around 48,000. And then 28,000 would be right there. Okay. Down just slightly. Something like that. Close enough. Okay. See how there's a lot of price action right there and right there at 28,000. And then also at 48, there's some right there. I don't know. I'm not really sure. I just, at the last one that I saw that was, I don't want to say obvious, but it looked fairly apparent to me, was this level right here, this white line right there, and it hit it. Now we got that one. And as far as where it's going from here, I do definitely see support levels just like they do around 50, 48,000. And then also down here in the high 28s, it's pretty regularly. I mean, every few years, Bitcoin will just lose, 80% of its value. I don't see any reason why it can't do the same here. I mean, from where we're at now, that's 60%, 65% down to 28,000. That's certainly doable, I don't know, but I definitely see those support levels as well. Alrighty, this one's running long. Thank you guys for always being here. Really appreciate it. Love you guys. Be sure to check us out in the Rural Classroom. Looking forward to Adrian's presentation on dividend stocks. I know a lot of you guys like the dividend stocks a lot because you're always asking me about them. Well, Adrian's doing a presentation and you can ask him whatever you want on Wednesday, 7 p.m. Eastern Time. Thanks for always being here. Be sure to support the show with a donation. Link is down below. And share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.